What is the market telling me this week? This is the Rutherford Report, and I'm your host, the Angry Investor. I get pissed off at Wall Street because they try to take advantage of the little guy, like the advisor who never made my mom any money, yet invested her money for over 10 years. This was before I knew anything about investing. So I'm here to watch the market and watch the trends that can make you money. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Let's get to it. It's been a crazy week in the stock market, and everything's been up, everything's been down, and it's gone down a bit, especially because the Fed came out and during their meeting, they're like, well, we see inflation doing some stuff, and next year we might not cut as much. I say it this way because, well, they're going to do whatever they want to do, and it's a little outrageous when the market acts this way. So I want to look into the data, look at the trends, and really see what the market is telling me. So this first article I want to bring up is the Fed's favorite inflation indicator. Well, it's holding at a 7-month high. If I look at this chart, there's not really a huge deviation here. So until it really starts to deviate up, I'm not too worried about it. And frankly, if you look at things like this article where University of Michigan's inflation expectations rise, driven by downbeat Democrats, downbeat Democrats. I'm not really sure what they're talking about there. But if we're looking at just the University of Michigan inflation expectation graph, which is really why I came to this article, there's not a big standard deviation here. Like, look at this. The chart is basically where it's been. So most importantly, I want to look at the market. So oil is one of the biggest tells of what's going on with inflation because oil drives everything. It drives the products like that we eat because they got to get trucked to where they are. It is the cost of all the energy, everything. Oil is everything, literally everything. Transportation, production, everything. And if I look at that, well, let's look at it. It looks, for the last 6 months, is very flat. For the last year, it's at the bottom of the trend. For the last 5 years, it looks like we've really settled in a range, and we're really in that range that everyone loves oil to be in. And I'm talking about everyone. I'm talking about the oil producers where they're making money. And research tells me that that's between $60 and $90 because if it gets too cheap, they can't make a lot of oil profitably. And if it gets too expensive, consumers can't buy as much oil. So we're in a sweet spot here. It's trending sideways. I see no problem at all. So it's kind of funny how the market reacts. And here, let's look at gold. Supposed to be some big inflation hedge. Well, it's down on that news. Inflation's coming back and the inflation hedge is down. So what does that tell you? It tells you that a lot of time Wall Street is just trying to take advantage of people, whether it's the big banks and the traders pushing it around or their algorithms, just trying to screw the little guy. And I want to cut through that noise and tell you what I think is the most important to pay attention to so you can make money. And here's the thing. This isn't new that inflation is coming up, because if you look at websites like Truflation here, you can see that inflation has been trending up from where it really bottomed at 1.7 and now it's all the way up to 3, and this has been trending for 1.5 months. Let me really zoom out here. So you can see we were in this range. Now if this goes above 3 here, I'm using air quotes around this. If this goes way above 3, there could be a big problem. Then I'm going to want to invest in things that will protect me from inflation. And if I use 2022 as a guide, well, oil protected me from inflation. Well, everything else didn't. So I'm going to be paying a lot of attention over the coming weeks if this develops into a trend or if this is just sort of just some aberrations in the market, because as an investor, what I want to do is watch the trends, because when I'm watching the trends, it allows me to become a super investor because I can take advantage of these trends. And right now, I don't really think it's a trend yet. Could it turn into a trend? Sure. Let's zoom out here. You can see that it's really been trading in this 3.5, 3.3 range all the way down to 2-ish. We don't need perfect numbers. We just want to see where the trend is going, because the trend is going to tell me how to take advantage of it. And right now, there's a lot of interesting trends in the economy, which is the trend that I've been talking about, the two different economies, because bankruptcies are happening. And if you're not in the new economy, taking advantage of AI, the cloud, all the digital transformation, well, things are happening to you. Like Big Lots announces it will start going out of business. Here comes another bankruptcy. And this is just telling me that I don't want to be invested in places like this. And what am I talking about? The dollar store, these retail places, because with higher inflation, I don't really care if Truflation or University of Michigan or the Fed's favorite indicator say inflation is way down here at 2 or 3. I certainly don't believe it. When I'm at the store, things are not cheap. They're expensive. They seem to only be getting more expensive. In fact, my health insurance went up tremendously. It's up like 20% for no reason at all. And that just tells me that there is going to be huge problems for the lower end consumer. We're going to zoom into the data because the market is really telling us what to do here. The next trend I'm watching is this trend. It says, is China big gold purchases for protection against the dollar or to attack it? Well, frankly, I don't need to know that, nor do I care about that. I only care that someone is out there who has a lot of money and they're buying gold, because you know what? That will push up the price of gold, or it will help maintain the price of gold. So this is a trend that I'm watching, and I'm using this anecdotal evidence here just to see if the trend continues, because if you've been watching some of the past weekly updates, every week it seems like someone else is buying more gold, or some country wants its gold, or some state is talking about a gold-backed currency, or Costco is selling more gold. And this just means that the price of gold is here to stay, most likely, at least until we see signs that this trend is changing, and it's certainly not changing right now. Now, I do want to talk about the biggest risk to the market, and that is if the new administration comes in and does something wild. So people get all worried about this. Well, guess what? There's no chance of that happening until January 20th. So the market will probably go up till January 20th, and then if everyone is really worried about it, they're going to start selling off. Now, of course, some bad data could come in before then and cause a market correction or a march towards a recession. Who knows? But right now, I just don't see that. And what I am looking at here is this article that says 50% of Canadian manufacturers consider laying off if Trump tariffs enacted. This just means to me, my interpretation of this is that the new administration is going to be able to bully Canada into doing what it wants, because I find it highly unlikely that Canada is going to voluntarily shut down 50% of its manufacturing. Or 50% they're going to lay off. Whatever it means, I don't need to know the specifics. I just need to watch the trend. And this just is another, to me, it's a nothing burger. At least it's a nothing burger right now. Now, of course, we have to watch the market and watch what actually happens, but I don't need to prematurely sell out of my stuff just worrying what might happen, because something might happen, something might not happen. But right now, the real trend comes in the data, and I'm going to look at the data because Micron reported its earnings, and it tells you everything that you need to know about the economy. If you're not making money in this market, well, you haven't been paying attention to this type of data. So on page 20 of Micron's earning report here, their compute and networking business unit, their revenue was up 46%. Why? Well, they're selling memory to all these data centers because AI, the digital transformation, cloud computing, this is where the growth is in the economy. So if you're positioned in companies taking advantage of it, you've been enjoying a lot of money. And if this trend continues, which it seems like it's going to continue when revenues are up 46%. Now, however, there's the other trend that we've been talking about all the time. Look at right here. It tells us mobile business unit revenue down 19%. I wonder why. Maybe because consumers are cash strapped and they're not buying as many cell phones. So do you really want to be long cell phone companies? Well, that dividend of Verizon might seem really, really sweet, but it's an area that's not growing, and growth equals expansion, growth equals higher stock prices, and 19% declines is not a place where I want to have my money invested, because I want to make money, and to do that, I need to be in companies and assets that are taking advantage of trends. So here, clearly, down in the data, we can see the data center revenue is up. Mobile is down. Embedded business unit revenues were also down 10%. What is that? Auto, industrial, consumers continue to manage their inventories lower. So they're selling less RAM to auto and industrial. So this tells me the same story. This is the same trends that I've been pointing out week after week. And you're going to want to stick around, subscribe to this channel, because as we uncover these trends, you're going to know where to look to make money. And clearly, the auto industry is not a good place. Of course, Tesla could be doing really well, but that's just one out of many. And you can see that that's mostly driven by future projections, because yeah, we might have autonomous driving, yeah, we might have robots, but that revenue is not there today. And you know what? It's not there tomorrow. Will it be there months from now, years from now? You're going to have to be the judge of that later. My point right here is I'm just looking at the data to tell me what is supporting the trends, because that's going to tell me where to make money. So a lot of people are probably wondering, how is the market up so much? How is it up here 26% since last January? Well, you know what? It's up because all the mega caps are taking advantage of this trends. And I just pointed out in the data the trends that's happening. The data center trend, the AI trend, the digitization trend. It's very obvious when you look under the hood. So I'm not really worried about a recession today, and the market is telling me to be bullish because, well, look at this trend. It's up and to the right. So until I see declining market trends, and until I see a slowdown in the AI data center digitization trend that makes up the majority of the market capitalization, I expect this to march higher. Now, of course, next month, got another few weeks before the job data comes in. If the labor market softens, then we could have a big problem. But until people have less money and this trend continues, if you're positioned correctly, you're going to be making money. Now, let's look at Bitcoin real quick. Bitcoin is up. I know obviously it's down like 10 grand. It was almost at 108 earlier this week. It's not concerning to me. If you're in this market for like one day trying to trade it, you're really not going to make money. I'm in it for 1 year, 2 year. What is the trend? Is this a sustaining trend that can make me money? And right now, if I look at Bitcoin, it's a sustaining trend because, well, we had the halving and everyone's getting excited. So it's going to go up and up and up until we have a dramatic blow off top. And it's going to be kind of obvious. And I don't think that today is that. Now, of course, I could be completely wrong and that could be the absolute peak. But I like to study the past to predict the future. And typically, if I just look at that 4-year cycle, we're nearing then, but we're not there yet. And of course, my favorite thing to always look at is the chart of NVIDIA, because this is going to tell me NVIDIA is the granddaddy of all these trends. And look at that. It's up and to the right. So until I'm seeing a sustained downward movement, the market is telling me everything is great. Now, of course, there are tremendous dangers that I talked about in this video. And we're going to want to keep an eye on that, because if something changes, I will switch from bullish to bearish. And right now, I'm still bullish, and I hope that you're making money by taking advantage of these trends. So if you want to know what I'm invested in right now, you can go to highreturnlowrisk.com. Subscribe to this channel, leave me a comment, stick around for next week. I'll come back on and look at the market, and when the data changes, I'll change my mind. But until then, I'm bullish. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.